David, lovely to hear you today. Thank you very much indeed for joining us. Look, just a quick question from me as well. The amount of money on deposit has just shifted from certain regional banks to let's say, the systemically important banks. So the amount on deposit, no one's lost a bean on deposit just as of yet. But the question is that capital as available for various sectors and various individuals and various parts of the economy as it was before? And so the big question ahead of the Fed later this week is the capital markets, is a constriction in those capital markets doing the job of the Fed for it? And actually, is there less liquidity available for all kinds of sectors? And if so, what is the ramification for valuations?
Yeah, I think there's two things going on there. And the answer to your first question is there has got to be less liquidity in the marketplace. If you look at the three banks that have been taken over, all three of them really catered to the tech industry, and they knew that world very well. And a lot of their clients were, pre-revenue, pre-profit, and the kind of clients that traditional banks just do not lend to because that's not part of their portfolio. Those banks really understood the risk on that. They charged a lot higher interest rates for that, but they were getting good returns. And it was not their normal everyday banking that put them under. It was how their investment, internal investment, their people in their back office, how they were investing the capital and the deposits that they have that really took these banks down. It wasn't their daily, day-to-day operations. So if you look at how they were operated, just going out and dealing with customers, all of that was very well done. And they gave a lot of access to money to people that otherwise would not be able to have access to that. So, yeah, I completely agree that it has really reduced the capital in the marketplace, especially available to high-tech companies. Second point I want to make is that the Fed, almost by default, is telling people you don't want to have your money in a smaller institution. You want to move it to one of these big banks. And in some way they are, they've kind of caused this problem because a lot of people have been pulling money out of these smaller, mid-sized banks and moving it to the big money center banks. Just because that's the message that they are getting from the government, is that that's what they should be doing. And in some way they're I know I hate to use this word, but it feels like there is a little bit manipulation going on. If you're an investor, you'd want to have more of your investments in the big money center banks rather than in the smaller and medium-sized banks, because that seems to be the government's preference right now. And I don't know that the government should not be their business. They should be agnostic, and they should not be trying to give favoritism or even the perception of favoritism to one type of institution or another.